Welcome to the ProfitRooms.com swing trade alert service. I am going to show you how to utilize as well as benefit from this service. For a low cost of $99 a month, you will be able to maximize the potential gains you can make just from our alert service in stocks, futures, as well as Forex. Every week, our subscribers for the Swing Trade Alerts will receive an email every Sunday before the time of 6 p.m. Eastern. You'll have access to a private link for the analysis for the week in regards to the entire market. You'll receive between 3 and 4 stock alerts, 1 futures, as well as a Forex pair. Depending on when you subscribe, you will see trades that are in progress. And at times you'll see Slack alert. So anyone who are a part of this particular service will have access to our private channel, which is the Swing Trading Room via the app Slack, and additional long alerts are also provided in there as well. So let's go ahead and you can see a few alerts, buy alert provided, as well as other alerts as well. Very active room in terms of new picks. Just remember, Ernest and I, we are active day traders, so naturally if we see something on a daily chart that looks good for a potential swing, we will relay that message to Kevin, and Kevin goes right ahead and input our analysis into the Slack app, therefore keeping our Swing Trade Alert subscribers informed. Now let's dive in and effectively show how to benefit from using this service. We'll focus on an email that was sent out Sunday, November 19th. We generally send between 3 and 4 stock alerts each and every Sunday. HLF will be the first one to take a look at. HLF. Alright, so we have HLF. Let's say an entry price of $66.37. For this alert, we want it to long, which is buy above $66.33. For a longer hold, the stop loss will be 65. Basically, we are willing to risk $1.33 in order to make, basically the first target is 68. So nearly $2 a share, we're risking about $1. And we also said we'll use trailing stops and monitor this trade in Slack. So as price reaches our target, we will take some profit and leave the rest for a potentially higher exit. So 68 was the target here. This is 68. Entry price, email sent out on the 19th. So we wanted it to long above $66.33. So this trade would have been taken, let's say $66.37, a few pennies above, and to hit that first target of 68. But as you can see, on this day, which was 11/22, the price went all the way to $69.08. So you could use that specific candle or day as a profit taken area. Let's go back to the spreadsheet. So 66.37, and let's say we exited at, give or take, let's be fair, 68.50. All right. Now, we'll do it based off of 50 shares. And then also 100 shares. So you can see the total capital that would have been used. So basically $3,300 if 50 shares, and double that for the usage of 100 shares. And that's based on the entry price. The unknown factor is always the amount of capital the subscriber is working with. Therefore, our risks to reward are very tight. We want to make sure that we are not giving back no more than $1 no matter what trade we may be in. So with this trade, let's say the same 50 shares, we managed to exit out at the 68.50, and this is all just simple math, and the profit would have been $106.50. As in, if we were to get stopped out, because remember, we were willing to risk $1.33, we would have therefore lost just $50 because of the amount of shares based on 50. So with 100 shares is a little different. Simple math. Based on 100 shares, we're willing to lose $100 and about, I believe, $30 to be exact. Now we'll do the same math. 100 shares times our exit, 68.50. Let's see. This is the amount we made minus the amount we invested. Therefore, that's our gains. So on this one trade, 100 shares, you would have made $213. 50 shares, you would have made $106. So far, that one trade, as you can see, covers 1 month subscription. We're going to go in a little further because we also want to give examples as if we were to lose in a trade. So this is just one stock. The next, OMI. So OMI long at $19.15 to $19.20. We had an $18.50 stop, and the first target is 20, and it needs to break for more upside. Next target 21.81 to ballpark 22. So this one's a little bit different in terms of risk. We're risking about 65 cents depending on one's entry. So OMI, here's the chart, and the 19th, Sunday, so the market opens 11/20th. Look at the high, which is $18.75. So that's the high of the next day's opening. Basically, price moved down. Look at the lows, $17.75. So therefore, no entry was triggered, and basically this stock was not in play after this breach here. We make sure to alert something like this, especially if the entry did not trigger on the first day and the price violated the stop loss, although our entry was never triggered. Let's look, 1950 to 1920, stop loss 1850. We go back, low 1775, and you can see all the lows, 1825. So this trade was a no-go. So no-go for OMI. Next, ZAG short, very aggressive short at $21.08. This is almost a dollar per share risk with the stop. So you're once again risking nearly $1. First target was $19.30. So let's check out ZAGG. ZAGG, we wanted to short at $21.08. So let's look at the 20th. So the next market day, this trade opened at $21.75. The low is $21.60. Therefore, it did not trigger short. We always like to reiterate, because something move above, because we want to short it, it has to move lower for us to get triggered. Because it moved above our trigger point to short it, we still have to track it, because we're waiting for this thing to push back down to get triggered short. So basically this one made a new high. Sat patiently. We did not give a higher entry to short. We basically wanted it to come back down to $21.08 in order to get executed. Price actually triggered on 11.28. Stop loss will still remain the same. You still only want to risk $1. And as you can see, we got triggered here. Nice downside momentum sideways until this eventually hit our first target, which happened to be $19.30. So this is a win for ZAGG. And of course, in the Slack, we generally raise the stop loss back to entry, especially if first target's been achieved. So therefore, you can continue to ride this trend with the possibility of making so much more depending on one's holding power. But 1930, this trade was a success. So the trigger 2108 for ZAG. And profit taken ended up being 1930. Remember, OMI did not work out. Never executed as well. Stop violated the original stop before the execution, so that trade was canceled in Slack. That's why it's important to be a part of our private swing trade alert, because we will always keep you informed if something triggered or did not triggered, or if something's still in play or no longer in play, or if we're trailing for higher potential rewards. We love to keep subscribers updated so they can maximize their gains and truly benefit from this service. So ZAG, 50 shares, 2108 short entry. So with this one, you have about $1,000 invested here, which is short in 50 shares. 100 shares, we have a little bit of 2,000 invested there. So we're going to continue on just to see the potential gains for this one. Kind of all over the place. This is quick, simple math right here. Alright, so we sold the 50 shares, or I should say, yeah, we bought to cover at $19.30. And let's see our gains. So when price goes down, that's where you make your money, because we shorted. We're on the opposite side of the market. So if we basically, this is the made 89 bucks off of that trade. Mind you, just imagine implementing options as well, which will be our new focus for 2018. We're going to give one option trade as well, because the power of options, especially with small accounts, greater reward. 1930, wrong place. So the 100 shares covered at $19.30, and this is what this trade yield, about $178 based on that short. So far, if we do the math, and we'll just take the total from this, 213, plus the total from this trade, and this is just stock alerts alone. This is the money made basically for having 100 shares, right? So far, so good. And versus, I'll put the total over here. It looks kind of awkward, but following along, so you can see this is the money made with just having 50 shares. And the entire purpose is to basically grow a small account. So let's say if you have a total of, like, let's say a $10,000 account, and you decided to take our swing alerts or join our swing alerts, you'll be able to basically diversify in terms of the different stock picks we provide. So let's say 100 shares in HLF, 100 shares in ZAG, and OMI did not work. So basically your net benefit for, this is not even a month, this is just 1 week of service, 100 shares would have been $391. And we can take a look at these charts. This one took a little bit longer to play out in terms of kind of had to wait for the next week to hit that trigger point, but it worked out nearly probably 2 weeks of the alert. HLF we see worked out the same week basically. So we kind of time these where you can either make your money in 1 week, 2 weeks, and then we have swings that are definitely longer term trades. For example, we could zoom out and Weight Watchers. That was definitely one of our alerts. And as you can see there, with a $12.10 entry, just imagine trailing this, right? So that's the benefits of the alerts. I will do another example from our October 15th. And I'm trying to find some trades that may have hit the stop loss, so you can also see if something hit your stop loss, especially if you're in 100 shares of each pick, how you will still be able to net positive. And that's the beauty behind our swing alert service. We want to make sure that the trades that do work, you're able to maximize, and the trades that don't, the risk is so tight, you're risking $1 and the most. And most of the times we try to keep it like a 50-cent stop. Therefore, if you do 100 shares, you're only losing $50. But keep in mind, this is only a week. Now I'm going to show you another email. Instead of October 15th swing alerts, I am going to proceed with December 3rd. It's more recent, and it will really highlight what I mean by being ahead regardless if 2 stocks potentially hit your stop loss. For this particular week, we gave 4 stock alerts: SYNA, PM, bonus alerts, MRK, and Dish. We'll start with SYNA, long, and PM, also a long. SYNA, as well as PM, by 38.87 to 38.96. Let's say we got triggered long at $38.90. Let's go to the date of the long trigger. This is the 1st, so the 3rd is a Sunday. Market opens on a Monday, which is December 4th. We were triggered long here and stopped out the exact same day for this low hit 38.20. Our stop loss was at 38.34. So therefore, we took a hit on that trade at 38.34. That's the stop loss. So let's do some math here. 50 shares times the alert triggered long. We'll do the same thing for 100 shares. Now we will also do 50 shares times the stop amount, as well as 100 shares multiplied by the stop amount. And you will see where we lost on this particular trade. So with 50 shares, the risk was about $28. And with 100 shares, this risk was $56. So both of these are negative, and let's reflect that in this spreadsheet. All right, so we will move on to the next stock alert, which happens to be PM, also a long. PM buy alert at 104.05 with a 50-cent stop loss. We also gave an alternative buy based on a retracement entry. So if the stock pulls back, we want to get triggered at a lower price. We alerted and many were able to get the pullback entry long at 103.40, and our stop here was at 103, therefore only risking 40 cents. This is the 4th. The alert was sent out on the 3rd, which was a Sunday. On the 4th, PM went as low as 103.04, never violating the stop loss at 103. On the way back up, we were able to get triggered long at 103.40, alerting everyone that we are taking the pullback long entry. The next following days, we took profit on this strong candle around 107.80, and then we lowered, or I should say raised, the stop loss now to 105 on the remaining of the shares. So 105 is about right here. This is the new stop loss area. Give a take here. PM then proceeded to pull back slightly, never violating the new stop loss. And then we took the remaining profits up into this push, averaging out around 110. Now if we go to the spreadsheet, so two profit taking areas. So you have the 107.80 and then you have the 110. Let's average that about, exit around a 109 average. Our entry was 103.40. So once again, do some math here, 50 shares. See how much capital invested, taking 50 share position in a $103 stock as well as 100 shares, and then exiting with an average of 109. This was an excellent alert here, and let's see the total amount we were able to gain based on 50 shares. Able to make $280 off this trade, and based on 100 shares we were able to make $560. So as you can see, so far we're still net positive, but we have 2 more stock alerts to do for this very same week. So we will go ahead and proceed with Merck as well as Dish. MRK, the buy alert was at $55.95, risking about 94 cents. Stop was at $55.01. On the next day, which is a Monday, we were triggered long. It did go higher, but look, top and tail, and therefore it violated our stop loss, which was $55.01 right here. So that's a loss of 94 cents on MRK. So entered $55.95, stopped out at $55.01. And we will proceed here to do the math and see how much was invested and the loss here. And then we will do the same thing with Dish as well. And then we will add up everything for this week to see if we were able to have a net gain despite the losses. See how that works out. So With 50 shares, $47 loss. With 100 shares, $94 loss. And that's all based on the risk to reward ratios based on shares. Of course, smaller accounts, 20 shares, 30 shares, all that simple math, it will come out to a lesser loss. But we like to use 50 shares to 100 shares just to give you an idea of exactly how to trade these stocks. And when you're doing this, you have to keep an even distribution with the amount of shares so you can see if you net positive at the end. Now Dish, we alerted to buy at $50.45 to 50.50. The stop loss was 50 cents. Now this particular alert is very important because this is the one we updated in Slack, our private channel. We were triggered long on the 4th, which is the next trading day, the Monday. The low was 50.35, the open 50.54. Our trigger long was about 50.50. So 50.50 we're in. It went as high as 52.14, and then the next day it went as high as 52.53. Now because we are watching the price action with the alerts we do send, we update in Slack to say Dish is up over $2 a share from our entry. Please take profit and raise your stop to break even. There's no need to lose on a swing trade, especially if you're in the money. So it's wise to either take profit or raise your stop just to make sure this thing trends. So even if you're stopped out at break even, or if you agreed with our analysis for we updated in Slack to take profit, your $2 a share, you will pretty much exit out here. So 50.50 is the entry for Dish. And we alerted to stage left once it hit that $2 per share mark. Therefore, I already did the math here. 50 shares times the entry price, 100 shares times the entry price, and then as well as the take profit, and then you'll see your gain. Now, for this particular week, all 4 alerts, we had 2 that did not work out well, 2 that worked out well. This specific week, we had 2 that were also bonus alerts. Now let's sum up the outcome of this particular week. So basically we're adding the gains as well as the losses. Want to see if we net positive or did we net negative. Generally, we net positive. More importantly, we net positive at the end of each month. Therefore, always keeping the subscribers ahead of the subscription costs, as well as growing that small or even large account. As you can see here, the losses very tight, 50-cent stops, even some that were $1 stop based on 100 shares. You can see the risk here. And for PM, which was highly favorable, a 40-cent stop, but you can see that was like a $7 to $8 gain, and you can see the outcome. So basically for this week, 100 shares in each trade, stock alert given, with a net positive $610 even after the losses, or with 50 shares with a net positive $305 after the losses. A smaller count, generally 20, 30 shares, you still will make some decent gain. Same way we have the risk reward set up for the stocks, we also have the same thing for the futures and Forex. And the reason we only give one alert for these particular markets is because of the leverage and the amount of money you can make just based off of one alert. This QM trade was very successful. This yielded Trying to exactly remember the breach here because it did break underneath 58. So this was nearly like a $300 trade in just this one alert alone. Same for the Forex pair. I believe this was a 100 pip target and that was also achieved. Now hopefully I covered how to benefit from this service. And for any questions in regards to the swing trade alerts, please feel free to email admin@theprofitroom.com. And we wish everyone a safe and happy trading. Join us. And if you're willing to learn and really want to do this for yourself, we also have Swing Trade for Profits available. Thank you.